Today we will do reverse charge mechanism in GST. Normally what happens, look at the PDF. A supplier is supplying goods to receiver, and the receiver will pay money to the supplier. So supplier will even collect the tax on behalf of receiver and deposit it in the government. This is the normal mechanism of GST. But here it is reverse. Here what is happening? Supplier will supply goods to the receiver. Receiver will only pay the worth of goods to the supplier. And whatever is the GST to be paid, he will directly pay to the bank. This is called reverse charge mechanism. Why is reverse charge mechanism devised? This is to facilitate petty suppliers. Probably they don't have a GST account. So to facilitate such suppliers and bring them into GST system, this reverse charge mechanism is there. So one supplier is there, he is not registered with GST, but receiver is there, receiver is registered with GST. So supplier will supply the goods to the receiver. Receiver will only pay the worth of goods to the supplier, whereas GST receiver will directly pay into the government account. So this is reverse charge mechanism. Now, under this reverse charge mechanism, there are certain services that have been brought under the purview of reverse charge mechanism. These are legal services, chartered account services, art services like photography, music, and there are certain bunch of services that have been brought under reverse charge mechanism. So if any receiver is availing such services from a supplier, the receiver himself has to pay tax GST to the government. So this mechanism is called reverse charge mechanism. Under this reverse charge mechanism, there are certain services of government also that are brought under the purview. For example, postal department. Postal department will provide postal service, but they only receive money from the people who avail the postal services. They receive money only to the worth of service. They don't receive GST. So GST has to be paid by the user of the postal services. So postal services, they simply offer their service and they collect money worth their service. They don't collect GST. So whoever is using postal service, they are supposed to deposit the GST in government bank. So likewise, RTA is another example, Road Transport Authority. Whatever service they are providing to business entities, they don't pay any GST. So whoever using RTA services, they need to pay GST on that. So why is this reverse charge mechanism in place? Mostly to help petty suppliers who don't have a GST account, or some entities which operate from abroad, they are not in our GST regime. So such suppliers will be able to supply goods to the receivers who are registered under GST. So this is reverse charge mechanism. There could be questions on the theory of reverse charge mechanism, or who avails reverse charge mechanism, things like that. So let us move further. There is another scheme called composite scheme. This scheme is meant for small manufacturers, traders, restaurant service providers, restaurants, petty service providers. Such small entities, like people who do very less business, like their annual turnover is under 1.5 lakh, 1.5 crore. Any small entities who whose turnover is below 1.5 crore can avail this composition scheme. So, if you see the PDF, under the scheme, the manufacturer and trader of goods they pay 0.5 CGST, 0.5 SGST, and total they pay only 1% tax. So we we have seen what is CGST, SGST, IGST in the previous video. If you are not aware of them, then go through the GST1 video. So the traders, suppliers, restaurant owners, they all register under composite scheme and they avail the benefit of the scheme. So the restaurants who provide uh, like food to the general public, they pay about 2.5% GST to the CGST and 2.5% as SGST. So other service providers, they provide 3% as CGST and another 3% of SGST. So this composition scheme is to facilitate and benefit petty traders, petty manufacturers, restaurant owners, and other small businesses whose annual turnover is below 1.5 crore. So the taxpayer who is registered under composition scheme, he will not collect GST from the customer. He cannot collect. So whatever GST he has to pay for his service or goods, he himself has to bear that burden. And taxpayers who are registered under composition scheme, they cannot claim input tax credit. Then these petty traders, these restaurant owners, these petty manufacturers whose turnover is less than 1.5 crore per annum, they don't issue any tax invoice because they are not collecting any tax from the consumer. So what they issue is they issue a document called bill of purchase. So they issue bill of purchase. On that, there should be a declaration saying composition taxable person not eligible to collect taxes on supplies. So this has to be mentioned on the bill of purchase that they issue. Another requirement is taxpayers who are registered under composition scheme, they should glaringly display at their place of business a board stating composition taxable person. Okay, so composition scheme is meant for petty traders, petty manufacturers, restaurant owners, other uh, other businessmen whose annual turnover is less than 1.5 crore. If you register yourself under this scheme, you are not supposed to collect GST from customer. Whatever GST you are supposed to pay, that is as per this chart, the taxpayer himself has to pay. That is the trader or the restaurant owner has to pay. Next, he cannot claim any input tax credit. Once you are a composition under composition scheme, you cannot claim any input tax credit. Then composition scheme taxpayer cannot issue a tax invoice. He has to only issue bill of purchase. On bill of purchase, he should mention the statement composition taxable person not eligible to collect taxes on supplies. He should mention it on the bill of purchase. Then at his place of business, he has to display composition taxable person. This statement has to be displayed. Let's move further. we have already discussed what is input GST, which is also called as input tax credit, output GST. So to determine any taxpayer's tax liability, output GST minus input GST gives us tax liability that he is supposed to pay to the government. So when I need to claim input tax credit that stands against my name, I need to fulfill certain conditions. One, I should hold a tax invoice that is issued to me by the supplier of goods or services that I avail. So suppose I buy a product, I buy a pen. So I have an input tax credit to my account, but I need to have a tax invoice issued by the stationery shop that I have bought this pen. So that is the first condition. I need to hold a tax invoice. Second, the relevant goods and services, like in this example, the pen, I should have already received those goods and services. So I should have already availed those goods and services. This is second condition. Third condition, I should have filed my GST returns. So at a certain date or next month, we are supposed to file GST returns. So I should have done that GST returns, and only then I can claim the input tax credit. And the last condition is the tax that has been collected from me by my supplier. He should have already deposited that tax in the government bank. Understood? So input tax credit that stands against me can only be claimed when I have met these four conditions. What are these four conditions? First, I should hold a tax invoice issued by the supplier of goods or services that I have received. Second, I should have received the goods and services. Third, I should have filed my GST returns. Fourth, the supplier who has collected tax on my behalf should have deposited that money in the bank account. Only then input tax credit can be claimed. Understood? Now, whenever we are determining tax liability, we need to balance our input tax credit against our output GST. Then whatever is the tax liability, we pay it to the government bank. So how this ITC, input tax credit, is utilized is shown in this table. So input tax credit, it is used to determine output tax liability. So this is balance ITC. So what we do, see, we output GST minus input tax credit, so we will get the balance ITC. If there is any positive balance, that will stand against my name, that I can claim in future. So that will be carried forward. Then integrated GST, from integrated GST, we should subtract first CGST. So suppose a taxpayer is supposed to pay so much of integrated GST. So out of that, he can first subtract CGST and then subtract SGST. If suppose he needs to claim some CGST or SGST, then he can subtract them before depositing before carrying forward the balance IGST. So likewise, CGST you should subtract IGST, and SGST you should subtract IGST again, SGST or UTGST as the case may be. So this utilization of ITC is very important. This you will understand better when we do worked example. So you remember this utilization of ITC. So output tax liability is obtained by subtracting input tax credit from output GST. Then from IGST we subtract CGST first, then SGST first. Then from CGST we subtract IGST. From SGST or UGST we subtract IGST. So this is way, and whatever is the balance, it is either set off or it is paid to the government, or it will be carried forward. So this utilization of ITC, it will be clear when we do the worked examples. Now there is a GST portal where taxpayers go and register. Upon registering or upon registration, they will be issued a GST index number. It is called GSTIN. So against each taxpayer registration, a e-ledger is or e-passbook is maintained. See, this e-passbook has three ledgers. One is called electronic cash ledger. Second is electronic credit ledger. And the third is electronic liability ledger. So these electronic ledgers are maintained for each taxpayer. So any taxpayer can go log into their GST portal and see the cash ledger will show the details of amounts of cash deposited as GST by the taxpayer. Then credit ledger, it shows the balance input tax credit standing against that particular taxpayer. Then electronic liability register, it shows what is the tax liability that the taxpayer is supposed to pay to the government as GST. So a GST portal will maintain an e-passbook that contains three kinds of ledgers. Cash ledger will show the details of cash deposited as GST by the taxpayer. Credit ledger will show the balance input tax credits standing against the taxpayer. Then liability ledger will show the balance tax liability that taxpayer is supposed to pay to the government. So this is the electronic passbook that is maintained on GST portal. Now there is one more thing we need to discuss, that is e-way bill. E-way bill is electronic way bill. So if you see this diagram, a supplier is supplying goods to a receiver. This supplier is supplying goods to this receiver. So as per the GST norms, if the worth of goods that are being transported, if its value is greater than 50,000, it is mandatory for the supplier to generate an e-way bill. How does the supplier generate e-way bill? He will go to a portal. There is a portal that is being maintained by GST Council. It is called e-way bill portal. So there, the supplier will generate an e-way bill. So this e-way bill will have a unique e-way bill number. So this document, e-way bill, is generated from e-way bill portal by the supplier. A copy of this has to be shared with the transporter who is transporting the goods. A copy of this e-way bill has to be shared with the receiver. So whenever the value of goods is worth above 50,000, as per GST norms, it is mandatory for the supplier to generate a e-way bill with unique e-bill number, and a copy of it is to be shared with the transporter and receiver. So this requirement is also need to be followed when somebody is returning the goods. Suppose that the goods are not up to the mark. For some reason, he is returning a receiver is returning the goods back to the supplier. So if the worth of such goods which are being returned is above 50,000, then receiver also needs to generate an e-way bill that has unique e-bill number, and that copy has to be shared with the transporter and supplier again. Okay. Now let us move to GST returns. So if you see on the PDF, the, the, the GST return formats are described in this table. So what is a GST return? See, whenever somebody is going for shopping, once the person comes back from shopping, so they will give a summary of what happened in the shopping, where he spent what money, and what. Assume like your parent has asked you to go for shopping and they gave you certain amount of money. So when you come back from shopping, you will give the account to your parents. So this costed this much, this costed this much. Either you should get from back from your parents, parent or you need to pay back the balance to the parent. So such a similar thing also happens with the GST taxpayers. So at the end of each month, they are supposed to pass on the information to the government, which is essential. So what they need to share with the government? They need to share what is the input tax credit that they have accumulated over a period of month, what is the output tax liability, and what is the GST deposited. All such things need to be shared with the government, this information, from time to time. In certain cases it is monthly, in certain cases it is quarterly. So there are various formats that can be used by the taxpayers to provide such information to the government. Let us see what they are. So left side first column, if you see GSTR 1, 2, 3, GSTR 3B and 4. So these are the common GST return formats that are used by GST taxpayer. So first GSTR 1. See 1, it includes details of the supplies or the products you sell. So if I am a taxpayer, I am selling certain products or I am offering certain services. All these details I have to mention it in GSTR 1. That is first. Second, although I am a supplier and although I am selling goods, I might also consume goods and I might also consume services. So whatever services and goods I have consumed, and and whatever like charges I paid, GST I paid to the supplier of goods to me, that will be mentioned in GSTR 2. Then third, once you mention what is your outward supplies in GST 1 format for outward supplies, GST 2 format for inward supplies. Using these two, you can calculate what is your tax liability. So tax liability is mentioned in GSTR 3. Okay. But these three above formats, GST are 1, 2 and 3, they are very detail oriented, like they involve invoice numbers, everything. So but if there is a trader, like he is a petty trader, so he need not like mention all those things. So this is a simplified format of GSTR 3. GSTR 3B is a simplified format of GSTR 3. So it just comprises the details, monthly sales and monthly receipts without details of invoice numbers. So GSTR 3B is a simplified format of GSTR 3. Now GSTR 4 is for composite supplier. We have discussed earlier what is composition scheme. So taxpayers who are registered under this scheme, they only need to file their returns using the format GSTR 4. So this concludes the theory aspects of GST chapter. Let us look at worked examples.